Hey, good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast, July 22nd, 2024. Um, Interesting weekend for sure. The market hates uncertainty. Maybe that's what we saw today, was just getting ready for the next round of lying, cheating, and deceiving, or politics as usual. Let the games begin. Um, this is a quick look at one of our coaching students, and just wanted to highlight some things on his standard check-in that are noteworthy, things I look for. We meet every 2 weeks, and he's been making these adjustments by trading the ETFs for the smoother returns rather than the individual stocks, and he's trading the Dow, the small caps, the techs, materials, metals, industrials, energy, finance, discretionary, Mexico, and Brazil as his universe of targets. He made a decision that because the short-term performance statistically was not as good as the long and was generating more anxiety than rewards, he's going to stay with the long side and stop worrying about trading the morning hook and just waiting for it to do the SSC, and then use that as an alert to get into the Kata 2 as his winning long pattern. So by not trading the short side, he's only giving up the Kata 2 on the short side, which was not that big of a contributor anyway. So by being able to focus on the long side, it brings a little more stability and sharper focus and more expertise on the winning trades. So over the last 2 weeks, he's got 131 trades. The best winner was 3.76. The worst loser was -1, so that's what we want to see. The first thing I look for is no losses greater than 1, and then between 1 and +2. I'm looking for a normal looking curve that has positive expectancy. That tells you have a system under control that's working, and then the possibility of fat right tails, which means that you're letting your winners run. When we get that, that's what we want. His win rate is exactly 50-50, but the payoff was 0.96 to minus 0.5. And so that's essentially a 1-to-1 coin flip. And when he wins, he's winning 1. And when he's losing a half. Now, how often do you want to trade that system? You want to trade them all the time, every day, as much as you can. That's what you want. With 131 trades in 10 days, 2 weeks, that's about 10 trades a day, more or less. And that gives you this kind of display pattern. What I'm looking for here is that the trades better than 1 has a nice spread through time. So there's not like one cluster of winning trades that accounts for all the gains. No, this is a normal production curve that shows very controlled risk on the downside, and then the possibility of reliable routine upside trades that are better. And then what that gives you is a cumulative R that looks like this, and that's 30 R after 2 weeks. That's 15 R per week, and we can live with that. His rolling R average is stabilizing at above 0.2 expectancy, and that's pretty good shooting text. So that's what we want to see. I'm in a discussion with a couple psychologists. One is a licensed hypnotherapist, and the other specializes in emotional freedom technique, EFT. And here's how that is going to fit into our foundational trading. So if we take our little iceberg of consciousness and say unconscious, subconscious and fully conscious, where we're cognitively aware, that we use dialectical behavioral therapy or storytelling to allow us to take the stories of our lives and then apply restorying to change the sense of it and the thrust of it in order to take action on the new insights, to generate evidence on the new behaviors, and then use that to build positive structures. That's what we do with things that are under our conscious of awareness. But there's a lot of things going on underneath. The hypnosis and therapeutic coaching that Sonal does for me and for can do for us, and the emotional freedom technique, which is essentially disrupting the activity of your amygdala, that allows us to get in and change the emotional processes that are generating feelings of anxiety and fear at the biological level before it even comes up into feelings. Now, when we are feeling feelings, then we know that this is an alert that we can do something about it consciously to prevent the residual emotions from disrupting our trading routines. So the hypnosis and EFT is not eliminating those feelings and emotions, it's allowing us to manage them properly with battle drills to react, what to do when those we feel that anxiety coming on. Where's that anxiety coming on? Well, if you think about the 5 ways of knowing, your rational knowledge of the head, the knowledge of your heart, knowledge of your head is that rational, cognitive, rules-based, evidence-based science. The knowledge of the heart is your identity and values and creates the intention for what it is that you want to go after, the things that you value, your goals in life. The knowledge of your hands is the knowledge of skillful behavior when you're paying close attention as you become a master craftsman. The knowledge of your feet is how to apply the knowledge of your hands skillfully in a series of multiple iterations and repetitions and gives you the resilience to handle your business in all kinds of weather going forward. That's the knowledge of the feet, is how to walk the pathway through all different kinds of weather. Neither rain nor snow nor sleet nor hail will keep us from our appointed rounds. That's how you learn to walk that path, the knowledge of your hands and your skills. So that leaves the knowledge of your gut, which is the residual knowledge of fear and self-preservation that we inherited with our evolutionary brain. And all of our failures or fears in the past, I think of as a fear inventory, and that's down here in your trauma locker. And what your amygdala does, which is in charge of your unconscious, is in order to protect us, it knows that there were things that we learned to be afraid of. And when you start engaging in trading behavior and you know that you're intentionally taking on a risk, you can think of that serious effort that you're starting to engage in with your mind and your hands as triggering the amygdala, which says, oh, that guy is gearing up for battle. That means we must be getting into danger. So it activates the fear responses, and those fear responses come in and dominate elements of our trading performance. And then if our trading performance is negative, we have a losing trade, well, that just reinforces the amygdala's primary goal, which is and messaging, which reinforces the fact that we're not perfect and that's a dangerous activity, and that just makes it easier to be more nervous the next time. But here's where it gets even worse, is when you have a winning trade, the amygdala looks at that and says, not that we're learning and getting better, but it just says, oh, we got lucky this time, and now I'm worried that you're going to try to trade even larger, and then it's going to raise the stakes. And that means that the failure next time is going to be even more painful. So even the fact that we had a successful trade or a string of successes puts the amygdala on alert and even becomes more nervous the better you do, because you're anticipating the failure to be larger according to the amygdala. So in order to overcome these emotions and feelings based elements of our brain, the hypnosis and therapeutic coaching and the emotional freedom technique allows us to disrupt those negative messages before they get anchored here, and allows us to shift into areas where we have evidence of improved behavior, and we can essentially train away the overzealous fear response. We don't get rid of it, but what we allow it is we allow it to express itself through an alert, and then we do something with it quickly in order to take that energy that's coming and put it into positive behaviors that reinforce the learned behavior of successful trading. And then that evidence allows us to continue to respect the purpose of the fear response, but allow us to use that energy to do something positive and create the favorable skills that allow us to build positive structures that protect us against stormy weather. So I'm working with the emotional freedom technique guide to put together a course for us, for people that resonates with, that want to try that. There's a lot of science and good evidence that EFT has actual therapeutic value. I've used it myself. It has favorable ratings from Veterans Affairs in the treating of PTSD for soldiers. And we know that hypnosis works, and I use that with Sonal, and I'm satisfied with the results and excited to share them with you. So, in addition to the coaching that I do on the conscious side with restoring and protreptic coaching, which is dealing with the affirmative creation of habits that allow us to build positive structures, we're going to add the hypnosis and the emotional freedom technique to deal with issues at the root level that are part of our evolutionary brain. So you can look forward to that stuff in the near future. I want to shift gears real quickly and say that the guys that are taking the 2-session swing trading course with Phil and Griff are really satisfied with it. I wrote book number 2 in the swing trading trilogy. Book number 1, published last week, was What the Herd Thinks. What are the swing traders on the other side of the trade looking at? And that's about 250 pages of documenting swing trade strategies that these guys use so that we can appreciate, respect, understand, and then exploit the herd behaviors with our patterns, which are outlined in book number 2, which I published Saturday morning. And this is the index of that page by page of the mechanical swing trading book. I posted the video discussion of that on Patreon so you can hear me talk through what all the elements of that book are. If you are in the coaching program now or are on bronze or above, you get that book free. Otherwise, it's $197, and it has about 300 pages and includes all of the system descriptions of the mechanical systems, plus a complete set of 200 slides that I use in my advanced swing trading workshop that are like flashcards and self-explanatory and give you the basis for asking me good questions if you don't understand anything that's in the system descriptions or in the complete set. And if you buy that book, you get a Q&A session with me to answer your questions. So that book is available on Patreon as well. So I just wanted to share that with you. The final thing that I'm going to say is that the Danny Ben Yair, legendary trader, DBY, he lives and works out of Israel. His hedge fund advisory business is growing and demands more of his time. So we're going to stop selling the TC 2000 bundle on July 31st. We're going to give last chance buyers a 40% discount, so you can buy that at 3,000 instead of 5,000. But we're going to close it to new sales on July 31st. That's the bundle that he uses as an advisor to hedge funds. Those are his working tools, which gives you a meta system and comprehensive analysis. And it is based on the TC 2000 package and framework, which I use. But we're going to close that to new purchases. He's going to continue to support existing customers, but it's going to be closed to new customers on July 31st. Look on Patreon for a link to that, or send me a note if you're interested in, and if you need a payment plan, I can work with you on that. So that's what I wanted to say about that. So that's the update to the situation. All right, let's jump into sniper trades of the day. This is DIA. We got two trades today to look at. DIA. This is on 10 minutes. This was Friday's close. This was the gap up opening. Here's the 10-minute high, the 10-minute low. The 10-minute bar closed here, opened here, sold off immediately. So I get short right there. And I'm looking for a return to the Bollinger Band mean. That's the 30-period simple moving average. This is the Bollinger Band mean, or the 30 SMA. That's the standard risk. It moves almost exactly to, well, actually, it moves exactly to the Bollinger Band mean here, overshoots it down to here, and then reverses. As it comes back up, I just lock that in for about 1R. Then when it continues and breaks above the VWAP, I get long, and now I'm using this as my risk box. So short to here, cash one. It continues to go break out and get long. Check or hold?
Check.
It rolls over. It comes back and hits the, at this point, it was almost, but not quite. I guess it was at about the high of the day, right up around in here. And it kind of rolls over, is coming down. I take a 1, 2, 3 exit at the skin of the dragon. I didn't even wait for that to completely roll over. I had, I essentially gave back half of the open risk or the open gain, and I preserved this, which is about a 0.5. Then the price continued to fail. It hit the rising PSAR, so I get short here. Standard risk. It moves out nicely. Now this time it doesn't even quite make the same low from earlier in the day. It reversed higher. So there's a 1, 2, 3 exit, which is right even with the Bollinger Band mean. So I'm able to cash that little bit of a win. In retrospect, I probably gave back too much, but I wanted to give it a chance. So we kept that. That's about 0.2. That's a Kata 2, half an hour, dragon skin exit, and that was it for the day. So maybe 2 or 2.5, yeah, about 2R for the day on that one, on DIA. This one is NVIDIA, my focus stock. This was all the big tech monsters were doing really well. That's where it closed Friday. Here's the gap up opening. There's your opening range 10. That's a pretty good sized gap and go, so I think it's going to be in play. There's the breakout, and that first bar was really good. So, in my mind, if I get that kind of a move in the bar that I enter on a 10-minute, I don't want to let that ever go negative. And I didn't even follow my own advice, and I let 1.5 hour escape. That's just bad form. Dumb. Why? Because I believe in NVIDIA. So I take the re-entry after it holds support, and I let that one come all the way back to the VWAP. This is what happens when I believe too much. So that's a half an hour loss, bad form. My long side bias, 1, 2, 3 re-entry, standard risk. This time I take the exit where I'm supposed to for 2R. So that one's a scratch. This is minus 0.5. This one's plus 2. So I bring home 1.5 with not especially good trading on that one. Not my best day. But NVIDIA, I think, closed pretty well. Yeah, it closed pretty well, and at 123.74. So that's near the daily high. So that has a chance to follow through tomorrow. I'll be ready for that one. Let's see the traders. Alrighty, let's see. Here's Kevin. This is on his 3-minute, 9-minute. This is on Devon Energy. This one just makes an old fat man sad. There's a gap down and that directional move right from the opening on that harsh winter. He does take the SSC, harvests it here for 0.7. Perfectly executed, but man, I learned to give that up and let it go and donate it forward. A million times I've missed that trade. So keep trying. So this is good. He's building muscle memory on the patterns that he wants. And that's the pattern he wants. There was an opportunity for another Kata 2 in here. It would not have paid much, but that's what a Kata 2 looks like. After that harsh sell-off, you get the first bounce halfway back and starts to recover again. If that had gotten above this, then we could expect that to come all the way back up to the previous close. So that's the Kata 2 to watch for. And he stays out of the chop, which is good work. This is Chi Weng. He's playing DIA on the 10-minute. Now, remember from his earlier discussion, he was staying away from the short side altogether. And there's his reversal and like a 1, 2, 3 entry, and plays that very nicely for 0.5. Drag and exit. That will work. EWW, he gets minus 0.5, but a positive 0.6 for minus 0.3. And scratches out on EWZ, net zero for the day. So positive day at work. Hamad gets chopped around in DIA. It was a tough day in the US indexes, to be honest. And then Brazil, micro loss, and Mexico, micro gains. So it was that kind of a day that just he got what was available for today. Jonathan with XLE. And again, this is right from the get-go, big gap down implies potential for a large move early. And then when you get that large move, harsh winter, here's your SSC entry right here. I think it's a little slow. So I think we should be getting this. And then that could either be, so that would be a positive win instead of minus 0.6. That's a good reentry. And then that's slow on the exit. And that's why you end up getting a scratch out of those two instead of a positive gain. Um, quick loss. That's actually one we might have thought of on the downside. So I just think we want to tighten up our shot group here on the early move. And we talked about that extensively at the coaching session tonight. So all the coaching students, you're going to want to listen to that session. The opening 20 minutes, I think, was really good and helpful. EWW, kind of the same thing, gets chopped around and is not able to get on the right side of that rising market. Just pretty tight risk box. I'm not sure that that's a minus 0.75. That doesn't look like 0.75, but I trust your markup. Positive gains here on the 3 minutes in DIA, gets the SFC. I think you can be taking that one a little bit earlier, because this rolls over here. You get that next leg down, so you get the higher or the lower highs, I should say, and then the crossing of the dragon and the PSAR violation. Somewhere between here and the VWAP, there's a chance to get short because that thing is just clearly failing. That's an owl entry in here, which is front running the collapsing VWAP. And even that was a little bit late. So we only got 0.74 out of that when that could have been like 1.5. And that would have turned your day around. But that's a nice Z3 pinch and a good way to harvest some gains. Sundeep gets yeah, DIA on the 3 minutes was really choppy. We talked about at the in the coaching program today how to think about um, defining channels with all these places where the dragon is turning and where the dragon is turning up in here. That should allow us to get short in here and in here. And he gets long where he should here. This one you got to cut faster because when that does not fail below and starts to reverse, we can't let that get above the dragon. So there's some tightening up, and then that could be our entry instead of this one. And then that would be an even better one, and that turns that day around, I think. Let me find the daily report. I thought I had that open. Stand by. Bear with me just a minute while that opens. Yeah, for the coaching guys, the tonight's session with cohort 1 was also very good. The opening 20 or 30 minutes. So the one from Sunday and Monday and tonight, Monday night, were both very good. Should be opening. I probably have enough things open. Sorry about that. All right, let's go to the dashboards. Yeah, so the 150-day look back, we held support at 550, had a nice upward move today and a strong close. Now I think the market processing going from uncertainty to certainty about the elections. Looks, I think, a good second day of recovery. So this is when it closes today, with a higher low. So after this sell-off, which terminates at the low here, and then today's bar is right here. Here's your low and here's your high. That now gives us a 1, 2, ready for a 3. So any move tomorrow that's above this green line is an automatic buy, as long as it did not violate below the low of bar 2. So like if it opens where it closes and immediately takes off, I'm instantly long. But if it opens here and then goes down and breaks that line, then that whole pattern is off and I have to do intraday trading only. But if it opens here and comes down and stays in the yellow zone and then takes off, we're automatically long. So that's what the 1, 2, 3 on a daily frame looks like. Okay. Bullish normal conditions, a nice recovery today, volatility favoring sharp breaks in either direction. Emerging markets are signaling a buy on dip opportunity. Markets recovering from oversold, as you can see on the 10-day NDX. One breakdown in Disney was it got smacked hard today, as did Verizon. Plenty of auto framers because it was a relatively low range day and we're a considerable distance away from the 10-day high. Big boys, NVIDIA and Tesla led the way. That's instantly where I'm focusing tomorrow. Weakness in oil, and that's led to that sell-off in the energy sector and in Devon. Plenty of targets at better than 2 to 1 on the auto framer. As you can see described here, this is a shooter's gallery, a buyer's market. Merck, Procter and Gamble, United Health, all in that range compression in the squeeze, looking favorable. The TC 2000 auto framer showing plenty of targets above the red line at 2 to 1 reward to risk. Still being dominated by the summer and then the fall on both sides of the aisle, large caps and ETFs. A mixed bag of momentum here in the large cap stocks, but generally positive market response today in all the global ETFs. So I'm going to take that as the global markets were a little more pleased by the American politics being a little bit more resolved. I can put it that way. You see the top 10 by trading value, large average ranges and consistency of moves. Marijuana, NVIDIA, Tesla at the top. That's why they're on my short list. And today the market when we look at the Z-scores, it's actually pretty favorable response. The market turned after it's down around Z -1 on the 10-day. But it's given us a COTA 2 on the price action. That's actually a very favorable condition. Because the RL 90 is strong and the RL 30 is in a COTA 2 position. So I like exactly where this is for tomorrow's trading moves. All right, that's everything for today. We'll get this published and posted, and we'll be ready for them tomorrow. Take good care.